Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. The 21st, Wednesday. We do have a few things. Yeah, we get some Canadian numbers here, but for the US, still not many numbers. It is Wednesday though, so Wednesday tends to help out, right? Let's come into the charts. So here you got the E-mini. So E-mini taking just quite the dive yesterday. Zoom in here, and we are opening up within range of the overnight or yesterday's point of control. So we're kind of in balance for now, although things are kind of headed for the downside. Interesting. And when we come over and look at the markets, it looks like the RTY is actually outperforming RTY NQ. So it's the small caps outperforming, and the Dow, which actually did okay yesterday, underperforming. So a little bit of just kind of like reversion of yesterday's move. Treasuries had another big up move, and I can't explain where it came from or what the deal is or why it's moving at all. I am completely at a loss about what is going on in the treasury market. And apparently I am not the only one, because everywhere that I go and I read it, they're like, why are the treasuries moving the way that they are? And there's all these series and stuff, but we don't really know. Good morning. Sorry if you already said what happened at 4:50 a.m. I have no clue. There was some overnight movement here, but I didn't really see a read on anything going through my news that suggested like a news move. So I don't know. Coming over here to oil taking a huge beating yesterday, coming back into that range, giving up those gains that it had. I think a lot of this has to do with concerns about lockdowns going down again in Japan. So there's still concerns about demand. Gold recovering some of its losses from 2 days ago, just right at the moving average apparently. So we keep an eye on that. Silver, kind of the same. Now, copper also taking a hit last night over concerns about Japan and other places. And then when we come to the dollar just getting creamed. But for now, still above 91. Spot 91. So we're going to get some Canadian numbers here in like 10 seconds. Turn on text to speech. These are going to be Canadian CPI numbers. Okay, so theirs is in line with what we had. They got 0.5%. Man, Win posts so many things. The market has decided that we're priced correctly, and people are testing the upside and downside redom. I'm not so sure that that's what's going on right now, but I do think that it has to do with valuations. Yeah, I think that the market has turned around and said we have priced in everything that we possibly can in terms of the reopening going well. And so the risk is all to the downside from here. And the reopening is not going as well as had been hoped because there are some countries going into more severe lockdowns, such as Canada. So that's really the driver here, right? Okay. I am basically just chatting until you arrive. I did find one thing and ask the trading. What was the trading question? Let's see here. Okay, so let's start with this one. The news: Chauvin was found guilty on all counts. Did you see his face? I feel for his family, whoever loves him. Well, so when I see his face, when I looked at it, I didn't see much of a reaction. So, and for a person that is, trying to be professional and to help himself in court as much as possible, I think that, he acquitted himself well in that respect. I was a little surprised that they found him guilty on all 3 counts. To be honest with you, I really did not think that they had him on the murder charge because it requires some level of intent, right? Now, a lot of people on the right are all like, yeah, but they would have found him not guilty, but, they intimidated the jury, and obviously this violence and so forth works. Nah, I don't buy that. I mean, it's 12 people. You have to get 12 people to unanimously say that he acted with malice or whatever. I mean, I don't know. I don't think that protests alone accomplish that. You know what I mean? So, now there's a lot of people on the left that are like, yay, we did it, all of our protesting. No, it didn't. I would hope not. Like, if that's the message that everybody comes out, is that protesting works and that you can affect the outcome of the jury process of a legal process by protesting, like it super bothers me that people go to the courthouses and protest. Shouldn't be like that, Uzi says protests. Yeah, yes. Rioting. Well, yeah, they think they riot that the threat of violence works is basically what I saw, like, straight up quotes on Twitter, people saying that. And I would just say, I hope not. I wouldn't want to be on that jury. Yep. Now, I'm also reading, a lot of talk about they'll appeal, and they certainly will. And there's a couple of things that they can appeal, but the margin for error, like the probability of that all happening, is kind of slim. Yeah, unsequestered jury. How can and the area that they were from, because they didn't get a venue change, right? How do you say that they were an impartial jury? I don't know how likely they are to get that on appeal. So, but to be honest with you, I didn't watch the trial. These are 12 people that know more about it than I do. And who am I to say that the conclusion that they came to was wrong? And I'm one that we believe in the Constitution, and that's the process. If there was something undue in the way that they did it, if it was a mistrial, then they'll get that on the appeal. So, not gonna freak about it. So many people out there that are like, "Oh, our country's even justice is over." No, stop. Look, we have a system of government that's like, it's never going to be perfect, right? Doesn't mean that, like, the whole system is broken and we got to throw everything out, right? Sometimes it's going to result in things that you don't want to have happen, or frankly probably shouldn't happen. Uzi says they had me on manslaughter, but not the other 2 charges. Yeah. Well, but there's some real weirdness with the way that Michigan's law is on those things, too. Apparently, there's another court case kind of challenging the way that they even have their laws set up. So in terms of murder, so I don't know what the deal is with that, but I'm sure they're gonna appeal it. I'm sure they're going to appeal it. But I'm more interested in this whole thing that like it was, you know, did the riots really change it? Well, I mean, I don't know. I don't think that you could say that it was an impartial jury, but I still am kind of like, if 12 of them all said that he was guilty, then there must be something in there that I'm missing. Now, the one that I do know a lot about, and the one that if they found him guilty of all charges that I would be like really upset is Kyle Rittenhouse, right? If that one comes out and they find anything other than self-defense, it is going to be like, people are going to flip, because that is such an obvious case of self-defense, and the possible negative consequences for all of us if they find him guilty are like mind-blowing. In the end, the outcome was as well. And that was the other thing that I thought was interesting, was that, a lot of the synopsis is, like I said, I didn't know that much about it, but I did read a lot of articles about it, and largely from right-wing sources. The only sources that I saw that were saying, this trial is going in this direction or this direction, that were kind of hinting at, a possible outcome, were the ones on the conservative side. So I kind of thought that, the defense must be doing a good job. But then when it came down to the end, nobody on the conservative side thought he was going to win. So they all thought, like Uzi, that the jury was going to say that he was guilty anyways. He's a dumb person who didn't realize what he was doing. Yeah, well, maybe. Uh, that goes back to the thing. Yeah, I see what you're saying, because you're saying you don't think that it was murder. I don't know. It just bothers me that people think that protesting results changes the results of juries, of trial by jury. Anyways, what was the other thing that we were having that you had in here? Oh, okay. Wynn did ask a question. She said that daily FX as a currency trade, carry trade, involves borrowing a low yielding currency in order to buy a higher yielding currency in an attempt to profit from the interest rate differential. My question is, does this apply to your trading? Why? Yes, it absolutely does. So I don't know if it's really been a strong effect right now. It could be part of why we're seeing some buying in the treasuries, but there have been periods in the past, I think a little bit before you came in. I remember one period in particular where the United States 10-year yield was yielding a lot better than anywhere else in the world, even though the yield is still pretty pathetic. But it was like all of the funds and mutual funds what do we call this one? The pension funds. All of the pension funds in particular were like, well, we really have no choice, right? And so there was a lot of money that came into the United States because of that, and we saw pretty firm demand in the treasuries because of that. And it would really screw up your trading. I have to say, it was really like, yeah, it was interesting. Well, we'll just put it that way. There was a lot of things that people typically would do before that, because there was always this kind of underlying bid from foreigners, that they didn't work. So yeah, we definitely want to keep track of currencies. And this is why I've moved over to having a chart of the dollar index over here and making it nice and big so that I can see when it's moving. Because the dollar is going to affect the price of everything else that we trade, because we're trading in dollars. The reason the right started to think acquittals and stuff is because the state witnesses were debunking their own arguments. Oh, yeah. Terrific explanation. So I'm glad. You know, I just, let me go a step further and say that I think that to really have a solid edge in trading, and when I say a solid edge, I mean, like, you might have an edge that says that like 2% of the time, because of this pattern formation, it's more likely to go up than it is to go down. Okay. But when I say a solid edge, I mean like you have like a greater than 60-70% chance of predicting at least a very small term price movement. I think that you have to have some sort of valuation being factored into that, you know, you're arbitraging essentially. Like, I was explaining it to my wife the other day because I don't, you know what's so funny? She doesn't watch the podcast, and I will be having conversations with her, and she'll say some of the things that, like, I'm always whining that retail traders say. You know what I mean? It's not, I'm realizing that it's not just the mentality of retail traders. Like, I thought that it was like, oh, people are like this because that's just what everybody teaches. But what I'm realizing now is that that's kind of like the natural belief. That's what humans naturally want to believe about it, right? Um, anyways, and so the explanation that I gave to her was this: say you're at a garage sale, and you find an item that you think you can resell, right? Looks like a good item. You want to see if you can flip it, right? What's the first thing that you're going to go and do? You're going to pull out your phone and look up what it was on eBay. And then if they're offering it for less than what it was on eBay, you buy it and you turn around and you sell it on eBay, and you make money that way, right? Right? So that's trading. And how are you trading it? You're comparing relative value, and you're saying it's worth this much here and it's worth this much here, right? But it's based on the price of the item, right? The relative price of the item. And it's based all on current information too, right? So that's arbitrage. So that's what I'm saying. To have like to really, really high probability of predicting where it's going to go, you have to have some sort of analysis of what's, relative price. And in our markets, especially in the S&P 500 and the treasury markets that I trade, one of those most significant factors is the dollar. So I ask for all of the technical analysis people out there that try and trade the S&P 500 off of technical analysis. How do you expect to have an effective technical analysis if you're not factoring in the dollar into all of that? You know what I mean? You need to find that garage sale and get the deals. Well, you can. I mean, listen, man. There's websites that list all of the garage sales. Now is the time of year. The idea is to set your anchor price on little stickies and let the customer negotiate you down so they think they get a great deal. Psychology shows people can't really price their own stuff well. Well, I don't think that people really try. But you're right. Like think about a house. So I think a house is an even better example. Like say you want to buy a house to rent it out, right? Well, I've seen some pretty impressive spreadsheets where they go in and they say, okay, these are all of the utilities on the house, these are the income taxes on the house, and this is how much you're going to pay for the house, and this is how much you're going to be able to rent the house out for. And there's all of this spreadsheet to determine what is a reasonable price for that house so that you don't overpay for it, essentially, right? This is a valuation based on a number of like real factors that are, namely what it costs to rent it out to people, right? And you can't do that in your head. The number that you think it's going to come out to is probably going to be wildly off unless you use that spreadsheet a lot, right? And I think it's almost the same with anything else. And it seems to me like in the retail world that there are some advantages in that area, because how many retail traders do you know that are directly watching the dollar index? I don't think you're going to find many of them out there, because you would have to have data from ICE to get the dollar index that's like traded. So then you would have to do it synthetically the way that I'm doing it. And I haven't seen another platform that has a synthetic dollar index at all. If you come across one, let me know, because that's my competition. I got to scope out the competition. But as far as I know, the indicators at speculators.com are the only ones that I've seen that give you a dollar index, a synthetic dollar index. I've kind of been thinking like, man, there's a lot of things that I want to put on here right now that I don't get out of Jigsaw or NinjaTrader. Maybe I should go back, and instead of waiting until we have the market by order data and building a platform based off of that we build a platform just off of the few 2 or 3 platforms that we feel like all of the other platforms are missing. Yeah, I always compare trading to buying Doritos. Yeah. When you see it tank from $4 to $2, does that mean sell it too? Hell no. Well, yeah. So I wonder, like, does anybody go and chart the price of an individual house and use that to determine whether you should buy or sell it? Like, it just it seems kind of silly, don't you think? Shouldn't you just analyze, like, what are all of the materials in the house at current market prices? Like, what would it cost you to build a house like this? What are some of the other houses that are currently on the market right now? Like, what are your alternatives? And then use that to price the value of your house, right? There's another great example, though, right? This is where, like, interest rates versus the E-mini and all of these other instruments, watching them together kind of matters, because those are alternatives, right? So we want to track the value of alternatives to see how attractive they are, because they could pull demand away or whatever. Or if those are going up, maybe the value of my thing should be going up. But the more I look at it, the more I'm realizing, like, okay, like, I see stuff out there that kind of suggests that there's like some efficacy in technical analysis kind of things. But then when I look at those, like, anytime that I look at anything programming, right, any kind of, robot, trading robot, they're almost always on portfolio theory. Like, they're using technical analysis to determine what is the best stock to trade that one day. That's a totally different thing from just watching one instrument and saying, oh, here's a head and shoulders and here they cross the moving average and stuff. So when we start doing that, I don't see a lot of scholarly research on that stuff. So I've done my own research, and I've gone through almost every indicator that there is, and go in and saying this indicator crosses this threshold tends to mean this. And anytime that you find some sort of skew in the probabilities of how something behaves, you have a corresponding risk reward setup that still makes that trade break even. Seems to me that the markets arbitrage away any kind of technical mispricing. They try to. Bill says the price of lumber is sky high right now, almost too expensive to build a house, at least with wood, maybe a container. Yeah. Zillow should add an RSI indicator for this. Freaking hilarious, Stephen. No, so the price of lumber thing is really interesting to me. Well, your guys' reaction to it yesterday was really interesting to me. So I said it's all at the lumber mills. Everything that I've seen, anybody that I've seen talking about it, and this mostly comes from TikTok, but I love that TikTok knows that I'm interested in this stuff. Anytime any person on TikTok makes a video about why is the price of X thing so high, and they give their opinion. And so all of these guys, and mind you, these are all blue collar guys. These are people that use the materials on a regular basis. But even more so than that, a lot of these are guys that like drive the trucks and stuff like that. And so what are these guys saying? Oh, when I go to the lumber yard, the trees are stacked as high as they ever were, and the finished lumber is stacked as high as they ever were, and they're just cutting stuff nonstop. And they think that there really isn't any shortage of lumber. There is an increase in demand, but that there's more than enough supply to meet the demand, and the lumber mills are intentionally not cutting or not shipping out as much stuff as they could. They're just like letting it sit. And sit destroy. I don't know what that is. I've been teaching privately and playing in crappy bands, but otherwise working at a diner and a pizza shop and a beer store. Well, at least you can work at a at a restaurant or a diner. Man, some places are still destroyed. And then there's that whole thing about like a lot of people just don't even want to go out and work. Like they're having a hard time finding applicants for some jobs. It's just the whole thing is just kind of crazy. We're in a really odd spot in the market that ain't gonna last very long, is it? I get why the Federal Reserve says it's transitory. It's just that I'm kind of seeing some things that suggest to me that inflation will be higher beyond just these short-term supply side issues. And so why I'm doing the stocks now, because I gotta get it. Well, I don't think that that's the right way to think about it, Keller. Like the thing with stocks. Okay, so like putting your knowing that you should invest a lot of money, and you should put that money in an index fund, which really means contribute as much as you can to your 401k and your IRA accounts. Beautiful. Lovely. It won't really matter until you're retired, but that's one of the most important things that you can possibly do that a large portion of people out there, particularly millennials, haven't been doing. Okay. Managing your own portfolio. Managing your own portfolio is hard. There are edges, and especially the things that kind of hold the large institutions down kind of give you a little bit of an edge. Many large institutional investors like Peter Lynch and Warren Buffett have advocated for managing your own portfolio if you're into that. So you can manage your own portfolio and beat the index and do okay. It's hard, But what I found is that if you really do your research and everything, the worst thing that happens is you put all of that work in and you match the index anyways. You know what I mean? Okay. And then we get into swing trading and day trading. And the reality with swing trading and trading and day trading is that you are almost certain to lose your money. So I see a lot of people come in and say, okay, I don't have a lot of marketable job skills at this time. I'm working low skill jobs, and so I want to go into stock trading. Then I can be my own boss, and so I'm going to trade stocks. And someday I will get good enough at it that I can just day trade for a living. No. No. No, 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 no. Like, if that's your goals, if that's the thing that you're going after, day trading is probably the worst way that you could try and do it. You know? Normally I would say, hey, go into real estate, but the real estate market is like oversaturated right now too. So probably the best place to go into right now is learn to code. Hey man, you spend all the time that you probably end up spending searching for technical indicators and finding out that they don't work, and you apply that to coding. Yeah, you're going to go and you're going to get yourself a 6-figure job. And then once you have a 6-figure job, then you're going to have all of that extra risk to where day trading can actually be a realistic thing, right? I kind of hate to admit it, but that is a bit of how I am, and you're right. Yeah. I see it everywhere, color. Man, there was this thread the other day. This kid, oh my gosh. Oh, thinking about it just like makes me sick, okay? So there's this kid. He says, oh, he's had a little bit of mental health problems in the past. He didn't really go into why. I'm going to guess that it's something like, depression or something of that nature, right? He lives with his parents, I guess. His parents and his mom and his grandparents. He has money from the stimulus check, and he wants to day trade that money, and his grandparents won't let him. And I'm sitting there like, well, grandparents are doing the smart thing, man. By the way, dollar index taking a little dive there. Still above 91, of course, so. Well above 91. You got to get to like 91 and a quarter before I think that they would start to really react to it. The treasuries seem to be moving around here a bit, though. Actually, I'm going to try this one right here. Hold on a second. No. There. Okay. Anyways. And he was like, well, I just want to take like my one shot. And I'm like, no, you don't need one shot. Like, this is something that takes people like decades to figure out. Oh, you're 34? I'd say I've been doing this since I was 18. And oh, I will say, because you're 18, right? You're like really young right now, right? I will say, though, that I've been doing this since I was 18. I'm 34 now, and I do think I've learned a bit during that time because I'm kind of neurotic about learning everything I can. Yeah. Well, listen, there's a lot of useful information in the markets. Man, if I had been a little bit quicker on the draw, I could have gotten filled there at 17.5 and picked it up. Now I have a good spot an okay spot in the queue. I'll leave it there, but yeah. When the other side has deeper pockets than you, then they have fear on their side because you will be afraid of losing too much and they will profit when you get out. Yeah. Well, and this is where trading a higher time frame is an edge, right? The issue then becomes an issue of efficient allocation of capital, though, right? Squawk talking here. Kind of like poker. Yeah, I guess. I mean, I don't know a lot about how poker plays, but I know that that's the thing, right? So the one time I played poker, they're like, okay, everybody gets this little bit. And it was like you had to risk all of it to even get through the first round. It's like, this is dumb. But no, okay, yeah. So trading a higher time frame allows you to have a much larger stop. And so you have a much less of a chance of just randomly being stopped out. If you really know something, you really have like a piece of information that has a good probability of predicting which way it's going to go, like news, then yeah, having that larger stop means you're less likely to get stopped out. But then your issue becomes deploying the uh, deploying the capital effectively for the amount of risk that you're taking on. Because the longer that you're in, that's a risk that you're taking on too. And you're in for a long time, and then something else comes along that you weren't expecting and ruins the trade, and could ruin a trade that ends up hurting a lot. And so you go through all of that, you come out at the end and you find out you would have made just as much if you had just buy and hold, right? And you ended up taking on more risk and larger drawdowns too. Like that's what happens for a lot of swing traders, right? So it still kind of comes down to that. Well, how do I put this? So there are edges where it's like on an individual trade, there's a couple of things that I can think of that just naturally give you an edge, right? The first one, and the one that if you can get it, you absolutely take it, is being first in the queue, right? But not really realistic for us, right? Okay, but that's one, like being in the queue and where you can get your spots in the queue and everything. There are edges that just like naturally arise just from that, where you can go through all of the scenarios. Just go through the scenario, you get filled, there's still 3,000 orders behind you, so you can immediately scratch into it and then go through all of the scenarios about what will happen, and you'll see that just based on the scenarios that can happen, you have an edge, right? So that's the first one. And then the next one is taking on lots of risk, which means having a larger stop to me. And even more so, having a larger stop than your target, right? And the other edge is just being able to be in the trade for a really long time, right? So those are edges that are kind of like free edges almost, right? Like I can tell you, any of you could go in and start trading with a large stop, and that would generate some edge for you, and you might be able to make some money from it, right? But these are also all edges that have extreme consequences in the longer run, right? If your entire strategy is based on getting a position in the queue, then when we have a informed trade come through against you, you're going to get slaughtered. You're going to take the trade, you're going to get the adverse fill, and you're going to get stopped out. If your edge is taking on more risk, then when we come into a market where there's people are taking risk off the table, then you're going to lose so much during that period that, for starters, your risk-adjusted returns aren't going to be very much. But then more so than that, almost any retail trader ends up stopping out. So there's big consequences to those edges, right? And so that's where I come in and I say, to really, truly have an edge that I think you can day trade off of, you need to have something that tells you that this thing is more likely to happen than this thing consistently, or it is likely to go to this location based off of these things, right? If you don't have one of those things, and you really can't prove it empirically to yourself, then you probably shouldn't trade. And how hard is it to find something like that? Extremely difficult. So difficult that, I go and I'll ask a retail trader, okay, so prove to me empirically that your edge has edge. They can't do it. Right? So, to come in and to say, well, I'm gonna day trade and that's where I'm gonna make my living from, kind of ridiculous, right? Because you're talking about, digging through to find edge for something for years, and then even if you find it, you might not make very much. Why would you spend all of that money to make that the basis of your career, when you could just go to a code camp for 2 weeks, or frankly just start learning online and code and go and get a coding job and be making 60 to 100K, by the end of the month? Makes no sense to me. And honestly, if you're smart enough to be able to make it at trading, you're smart enough to go to learn how to code, right? That's the other side of it. So for those of you, because I get a lot of guys in here that are like, well, you talk about the coding thing, but I just don't think that the coding is for me. And my response to that is, if you're really smart enough to figure out trading and become successful at that, you're smart enough to code. In my experience, the turtle won the race and is now cruising first class. The rabbit had a fast race and lots of fun, but now goes slow and steady on discount passes. Really, there is, yeah. Okay, then tick back down. I don't know. Let's see if I got my little thing set up correctly. I'm a little mad about how they ticked up to 18.5 without me. By the way, it looks to me like, well, actually, that's a little bit of flattening. It's a little bit of flattening, but at the moment, it looks like they're steepening it. I don't know how coding jobs are, but frankly, with my arrest record, I couldn't even get a job at the pool store or what. Well, so then you can even work for yourself if you really want to, and then nobody can do anything, right? That's a little hard because they would want you to have a good amount of experience behind you, unless it was like you make websites or something. I don't know. With my arrest record, are you a felon? Are you a felon? I'm wondering, how bad is it for misdemeanors? Like, if it's misdemeanors, I think that you just gotta wait 5 years, right? I don't know. I've never been arrested before. Yeah, learn to code and just sell indicators to retail traders. Yeah, for sure. For sure. Can you imagine if I came out and I told everybody, guys, if you buy my indicators, look at how much money you're going to make. And I used all of the shitty promotion tactics that almost everybody else in this space uses, how much money a month I could be making from selling indicators? Because seriously, I think my indicators are pretty dang good. I mean, I do sell them. You go to speculatorseth.com, free 2-week trial, and then $10 a month after that. You just join here on YouTube and you get access to it. Hey, it's a good deal, but I don't really push it. If you were arrested, don't resist. Seriously, man. We once owned a transportation company. We hired felons asking around if you can't find a transportation company that moves business to business. It can be big money. Do you think that Warrior Trading uses his audience to pump prices? I have certainly seen that accusation before. I'm only going to say on Warrior Trading that I do not believe that the majority of people will be able to duplicate his results. He is trading like low float stocks and doing some pretty crazy risky stuff. And so just based on the size of your account, it's going to be hard for you to duplicate his results, right? The other thing I will say about it is that Ross and Warrior Trading have been banned from the trading subreddits. So I don't know what the deal is with that, but apparently the trading subreddits felt that they were not following the rules and kind of abusing the subreddits. So that's all I will say about that. I don't know. One of the problems that I'm kind of running into with this whole thing is that futures trading ends up being very different from stock trading, right? Because so much of the edge in stock trading is the instrument that you're trading. If you can go around and you can find an instrument that's going to trend that day and all you've got to do is buy and hold it all day, then you're golden, man. Like, think about when you ever had that situation where, whether it's in the E-mini or the treasuries. I really think it's best when it's the E-mini, right? You know, like, you just know this is a trend day. And all you got to do is buy and hold it and then close it at the end of the day, right? Well, with stocks, you can go through, there's going to be a stock, at least one stock that's going to trend all day. And if you can find it, right? So much of the edge is picking stocks, and that is completely different from anything that you do in futures trading. In futures trading, you basically try to avoid doing that, you know? So trying to turn around and look at what the stock people are doing and saying, and like empirically proving them wrong on something is like crazy hard, right? Because I can come in and I can show you, well, this guy, he says that you should trade the moving average strategy. Well, if you go and you trade the S&P 500 index just off of a moving average, guess what? Doesn't work. Easy, right? But if you want to do it for stocks, you have to say, okay, well, here it is on this stock, but maybe then they'll say, but on this stock it works, right? So then you got to go and find the stocks that it works on, and then you'd say, oh, but that's curve fitting, and the market will change. But like, how do you prove that to them? You'd have to sit and wait and see what happens, and then see that only after they've gone through a bunch of different iterations and they're not making money, then they kind of will turn back. And at that point, it's not that those strategies have been empirically disproven, but just that they've tried it and they haven't made money with it. You know what I mean? True. I've never heard of that. Well, listen, so one of the problems another problem is all around. I've seen many people claiming to be successful traders, but then you kind of have to dig into it, because like I was saying, yeah, they might be making money, but like, are they making a good return on their risk, right? That's the thing that's so funny, is that you can make money and it not really be worth your time. Right? Like, if I'm going to make less money than the index, then I better be I better be taking much less drawdown, much less risk, right? If I'm going to make less money than the putting my money into an index, because I guarantee you, if you day trade, you're going to make less money than if you just put all of that money into an index fund, okay? If you're going to make less money, there better be something that you're getting back. And for day trading, the thing that you're supposed to be getting back is consistency, right? But then you look at some of these guys and you find out how they're building their quote unquote consistency, and it's like, oh yeah, but they're going to blow out. You know what I mean? So you might have a lot of people running around thinking they're profitable, and the reality is that their own analysis of their own results simply isn't sophisticated enough to really realize how they're doing. You know what I mean? So this whole, and this is where here's the takeaway from this. The idea that you can go anywhere and just say this person is making money and try and utilize those methods, it's not going to be an effective way of finding edge. It's just not, because they could be lying. There could be lots of things about their performance that they themselves don't understand. There's a lot of problems on that thing. So I would say if you're trying to find edge, the thing that you've got to look for is empirical evidence. Okay? Empirical evidence about the behavior of the market that shows that it is not that is not random. Empirical evidence of a market behavior that cannot be the result of a random walk. Okay? And empirical evidence, that means that you can verify it for yourself. Okay? So like if somebody gives you their trade history, that's not empirical evidence, right? A lot of those YouTuber con artist show accounts, but so yeah, somebody, if I got on here and I said, look, I've made money this year and here's all of my broker statements, it's not empirical evidence. It is anecdotal. The only way that me providing that to you could be empirical evidence was if I gave you the actual entry conditions of the strategy and you could go and back test it for yourself and, game it all out, right? Then you can go and look at the data set and verify that it would have gotten in on the places where you say it does, and you would be able to test it against a different data set to verify it. There are some guys in your Discord that post a lot of extremely impressive trades. Well, yeah, but that's still anecdotal. So I honestly, so you're not the first person to say stuff about Clark. I really haven't been paying attention. There's another guy in our Discord. He doesn't really post in the Discord much anymore because he kind of created his own, but Chewy. Chewy had a couple of good trades, but when I looked at what Chewy was doing, there was some holes in that. Basically, there's a couple of situations where Chewy was too early or wrong on something, and he waited long enough and it came back and he broke even, and he got lucky because any one of those ones that were wrong could have been really devastating. You know what I mean? So again, like, you can get confirmation bias. It's not empirical evidence, right? But here's the thing, is that if they really have an edge and they're sharing it with you, you should be able to empirically prove that is an edge, right? Like, can you empirically prove that having a good spot in line in the queue? I think that's the easiest example to explain to people, right? Having a good spot in the queue, being long, and having 3,000 orders behind you that you can hit back into to scratch. It would be better if this was pulled. So right now we're not in the situation, but say that this was flipped. This was 3,000. This was 630, right? Is that an edge? Yes, it is. We can go through and we can do the math, right? I don't know if I'm sophisticated enough to sit here and draw it all out for you, but I don't think that I would even have to do that. It's so obvious to you, right, that it's an edge, and that if you were a mathematician, you could prove that it's an edge empirically, right? And then you could go and do all of the studies and show that the actual market behavior does end up being the way that is predicted and all of that, right? So these guys, if they have a real edge, they're going to be able to do that. So when you see people come out and they say, oh, I've been profitable, just trade this moving average, and then they don't have any empirical evidence about it, just ignore them. That's what I've started to do, because I've spent so much time testing all of those little things that it's basically like, why even bother, right? But when somebody comes in and they say, volatility tends to cluster, here is the relation between implied volatility and realized volatility. Realized volatility tends to underperform implied volatility. So like the stuff that Kyle was sharing with us. He's not here right now, is he? But he was sharing us an edge I don't think I want to trade, but it is a real edge, right? Information about the way that volatility tends to perform that suggests that, yeah, you should, there's two ways to trade the options. Either one, you sell them if you have the ability to take on that much risk, and you really need a really big account to do that, right? But if you have the ability to take on that much risk, you sell the options, or you only buy the options in situations where you know that it's really going to take off and the market's clueless, right? Those are real edges that we can prove empirically. Well, the other one you wouldn't, but you would have to prove empirically that you have something that would predict the stock is going to take off more than the options say. But you should be able to prove that empirically, right? I ignore everyone who talks about indicators. Yeah. And that just, man, I feel like sometimes I get into this mode where, like, well, all we talk about on the stream is how technical analysis doesn't work, but that's okay. I guess that's my thing. People say I don't trade indicators because all indicators are lagging, which is true. Now, I've found some indicators, so like in particular, okay, so that one didn't work out. In particular, Euler, who's written a couple of books, the indicators that he writes, he is able to adjust for the error that is introduced by lagging, so that you get like zero lag oscillators and things like that. And when you backtest them, I can empirically prove to you that they are better than regular moving averages. At least for the thing that retail traders tend to use them for, right? Like cross of the moving average strategy, for instance. Euler's indicators are better, perform better. But they're not predictive. When I test them out, they're break even, whereas the regular indicators aren't. So, you know what? So I took a loss on that trade. I think maybe I should have thought about scratching it. I don't know do you think I should have scratched it? But I think it was an okay trade. I mean, like, I had an okay spot in line. The chances that they would have hit back into me at 18 would have been okay. But it would have been better if just at the very beginning when I first put that one in, if I had gotten filled, right? Anyways, I think there's something about support and resistance levels, but other than that, I don't think there's much. Yeah. Well, so it kind of goes back to the question. I think should be, okay. I don't think the question is, does technical analysis work? I think that it's almost no doubt in my mind at this point that technical analysis is ineffective on short time frames. That's my take. Of course, that's not a statement that you can prove per se, but I've spent so much time trying to disprove it that pretty much given up on trying to disprove it. Okay. So if that's the case, then the next question is why? Why is technical analysis ineffective on short time frames? And I believe the reason is that there is so much noise that what happened 5 minutes ago isn't really relevant. Like, once it's been more than 30 seconds, it's almost like not relevant anymore. So then you go into indicators and you use that logic, then of course, yeah, indicators aren't going to work, because it's factoring in, it's taking an average of prices that happened over the past 90 minutes or whatever your period is. And so a lot of the output is based off of past prices. Ergo, it's not going to be very effective. Okay. So then people say, okay, support and resistance. Support and resistance isn't the same as indicators. They assume, well, if I'm not using indicators, then I'm not falling into that problem. But you are. You really are. You think about it, right? To establish support and resistance, you're pointing out areas where price turned in the past. And just because it turned in the past there before doesn't mean a whole lot, right? And there are a lot. One of the things that's kind of interesting is I haven't found a whole lot of indicators to try and establish support and resistance. It's almost like there's this implicit acknowledgement that it's not consistent and that you can't program it. But I have seen some support and resistance indicators, and when I try and go in and say, like, okay, take the trade off of there, yeah, doesn't work. Doesn't work. So then people say price action. So price action has a lot to do with like the current bar, but it also has a lot to do with the current bar compared to past bars. So again, you're still factoring in past data. And you're factoring in like the current price compared to a past price. So it ends up having the same problem, right? But that's where I get into. So if you're going to take a trade that only factors in current information, then you have no choice but to bring in other instruments, right? You're going to have to bring in other instruments and have a formula to say this is like what the price is. And that's where I come in and I say, what you really should be trying to do is say, where is it going to go to? Where is it going to be in the future? And why? What is it about that number that is going to suck it in, right? There are some things that I would consider kind of technical, but let's say it's based on order flow. There are some things based on order flow that can indicate that it is going to get sucked into a price, because you get liquidity vacuums, right? I think that most of you guys familiar with the order flow know what a liquidity vacuum is and what causes them. So spend more time trying to find liquidity vacuums. I just had a weird thought about support and resistance and how you could maybe get screwed on a stonk that has rapid oscillations. And now that has me thinking of oscillations as a general concept. Well, so the market definitely oscillates, right? I think that there's this little debate about, is the oscillation a behavior that could not be explained by a random walk? But a lot of the new school, like most current technical analysis that I've seen, is trying to analyze the waves and trying to find some sort of a pattern in the waves. So like you're advocating trading based off of the volume profile. Well, I think that the volume profile can certainly help, but here again, I think that a lot of retail traders make claims about the volume profile that I don't think are empirically proven. So for instance, they say, a lot of the Jim Dalton stuff, so if we open, within the previous day's value area, then we're within balance. Well, I don't know if that's true. That we're going to go towards the previous day's point of control. And if we don't, then it's a trend. Yeah, I don't know if those are empirically balanced. When I've tried, and I'm not going to say that I've like expertly back tested every volume profile setup, but the few that I've tried, I was not able to prove that there was an edge that you could trade off of. Right. And maybe part of that is because those edges probably require you to swing. I don't follow any gurus, just to stream. Yeah, thanks. I'm not a guru. You understand correctly. There you go. Okay, so the E-mini is starting off pretty good. Pretty good. That buy kind of makes me want to just FOMO in, man. I don't know. Like, look at that. That's pretty darn good. Running into the icebergs there. They certainly got the buy side volume behind them, though. Well, it's not just a big candle. It has a lot of volume behind it, right? Nope. It feels weak. Well, it came back there. I don't know if that's... Well, actually, looking at the cumulative delta now, I'm saying, yeah, that's no good. It came back almost just as hard. I'll try it again. No. Interesting. So I do see a little hole right here, but at the moment it looks like there's sellers looking to defend it. So it seems like there's some fight in the tape today. It could do anything. Really, couldn't it? I actually said feels weak before. Yeah, it was kind of funny how that turned around. I mean, I don't know. Like, it was pushing into new highs. But it did kind of have that feeling like, I mean, look, there was a lot of absorption against that. That's a hard one when you start seeing those, is like, especially on the open, is like, okay, so are they going to turn there, or are the market orders just going to push through? I don't know. Still kind of weak, to be honest. Okay. Well, a large order just showed up. So they sweeped it up a couple of prices and a large order showed up. This has been a positive. indicator in the past few days. Yeah, okay. Looks like he was only there for a second. He was at like 20. No, where was it? Yeah, oh, it's still there at 20. Okay. So did he get filled? I didn't see if it canceled. It looks like he canceled. I don't know, guys. I think that one is one worth reporting. I don't know. It was 5 ticks away when it canceled, so see now that there's some volume there at 21. Like that could have been him right there. Oh no, the baby fell. My mom's got him. He has decided that he likes to climb up chairs and get on the table, and you have to watch him like a hawk, and he's fallen, and we've caught him a few times. He hasn't learned his lesson yet. And I'm worried that when he learns his lesson, it's going to really hurt. So that feels weak. But let's see here. That one just kind of feels like the people that were buying at 20 because of that large order kind of giving up. I'm gonna recenter things. NQ is like freaking all over the place right now, by the way. Large sell, large buy. Dollar actually looking a little strong right now. Treasuries at their highs. NQ is always all over the place. Good morning, Lucas. You can see it right there. That's the one just to the left of my DOMs. I only have the prices showing. And yeah, it's just, it moves so much that... Well, when we get runs, it seems like that things are in favor of the buyer side. But you can definitely see how when that large order showed up that it created a little bit of a liquidity vacuum at 20. So we got sucked back into that price many, many times. Yeah, that looks pretty positive at the moment. Are we going to have another jump in cumulative delta? Yeah, there's still, so one thing that I'm finding making reading the tape a little bit harder these days is that you get this absorption all over the place. It used to be that like 1,000 was a lot and you didn't see that very often, you know, but now it's everywhere, you know. It's like every area you'll start seeing thousands trade. Okay, easy fill. Now I'm seeing kind of gaming out some of my numbers. I think that this like 28-30 area looks likely. That's what I'm thinking. How do that compare? Okay. 30 would kind of be a resistance area of sorts. Doesn't mean that it will be a resistance area this time. It just kind of trying to compare. And the dollar is coming down quite nicely as we're doing this. Now the treasuries, not really backing off. You know what? My nose was super itchy yesterday, and we were having like a big windstorm, and now it's not as so itchy. And I'm thinking maybe I've had allergies. Ever since I got my deviated septum fixed, I think about my nose way too much. A warning if you ever get a deviated septum surgery. Okay. Still a pretty steady march up here, isn't it? Right now, that 32 now looks, that would be the overnight high. It's, they're headed right for it. Treasury is still pretty bid there, by the way. Wow. Okay. Well, I was thinking about holding it all the way through, but there was kind of like a little bit of a jump, and now we're seeing some absorption there, so. Look at it on the chart in the lower right, man. Holy crap. That was some move. I caught, how much did I catch off of that? I got in from 22. Dang. So well, I guess it was only a 10-point run. Still pretty nice. Somebody's putting some money to work. Well, we're still like on a daily basis, we're still kind of within like mean reversion kind of territory. So, are you gonna make another push? Are you gonna keep going? Now on my treasury here, I'm a little worried that if I get filled, that it's just gonna bust back down through. You know, like with as bullish as the E-mini has been looking this morning, I'm kind of wondering if some selling gonna have to come into the treasury, right? I made a good pick there. I'm not exactly sure how I'm doing it. I mean, it's not like I definitely see stuff and there's definitely things that I'm looking for to get out, but I feel like I've been luckier than I should be on the exits, that like when I identify one of those spots, it does at the very least slow down. Yeah. That one, now in this situation, that's probably like 3/4. You know what I mean? Hmm. She already taken the kids to school because oh, I guess so, yeah. Because they've got the robot. My robot butler is vacuuming outside. Can you hear it? I'm telling you what, when I become a Garlicoin million, where are they at today, by the way? You can come over here. Watch list. Now, first the Dogecoin. Dogecoin at 31. Well, that's no good. That's no good for them. They were at like 40 yesterday, right? Hoping to tempt for them. But the Garlic coin, oh my, Garlic coin at 0.86 now. Yesterday at 0.7, so they're up another 20%. Yeah. Oh man. This thing. Eugh. Do the 7-day. Yeah, so there was when I was like, oh, but then here, and this is good, and that's good. And now this step. Oh, man. I don't know, guys. The Garlic coin trend here looking mighty impressive. You have a robot butler. My Juliet Fair would be writing on top of that. I wanted to buy one when I had 5 free roam raw fed ferrets just to watch hilarity ensure, but not to actually expect it to vacuum. You got shaken out at the open? Well, I got shaken out at the open too, and I took it again. In retrospect, probably my initial trade. Well, actually, I'm going to say that my entry on both of my initial trades was a little flaky, you know? I don't know if what it was that was getting me into those spots was really strong enough to take those specific areas. Even though it does look like I kind of had the overall call correct. And then what happened on the second one was I said I got in and something happened, and so I decided to add to my winner. And I did get a little bit of how much adverse excursion did I get? It went against me 10, so it wasn't perfect. That's kind of what I was saying on both of those. I kind of didn't really get the greatest spots. I got a great exit though, didn't I? Seth just lucky, I guess. Man, Garlic coin. Garlic coin is I'm like, what is gonna happen? They need to get on a different exchange. Like it can't just be Fry Exchange, right? But I'm kind of thinking like Bitcoin has kind of come down. Well, so wait, if we come back here, 55. Yeah, it's just kind of ranged ever since they made ever since they came back here. That doesn't look like a market that's done to me. That looks like a market that's just gonna chop around forever and come back up. But I digress. There's there's a part of me that thinks Bitcoin may be done and that the altcoin season is gonna heat up. And to see Garlic Coin bidding up that aggressively going into that season is just really, really something. I mean, it's still just getting started, and I'm really it kind of scares me a little bit to think about what it could do. But either way, I think that in the end they are going to have to expand to another exchange. Maybe they can get on Binance. Maybe when Garlic Coin becomes one of the real top flyers. This is so dumb that we're talking about a freaking garlic. Oh my gosh. If you're looking for a new beacon of hope. Yeah. Oh, here we go. Yep. This is it, guys, right here. There you go. There's the guy. He's holding the Dodge coin's hand, but he's looking back at that garlic coin. Just continues going up and up and up and up. I mean, he's thinking, that garlic coin looks mighty fine. And I know what you're thinking. Oh, this is terrible. Let me put the disclaimer in here. Investing in cryptocurrencies is extremely likely. The chances that you lose everything is high. I would not risk sums of money that you cannot lose. Okay. Past performance is not indicative of a future result. This is not an endorsement that you should trade something. I'm just joking around. Okay. But remember when the Dodge coin started having its little bit of a rise, and you're like, wow, like that's a really good run for Dodge coin. But like the run's probably over. That's a lot. And then you didn't get in on it. Well, Garlic Coin is at that same spot, folks. And let me just tell you, from the way that I value it, it is crazy undervalued. The value of the social media network that it has and the reach that it potentially has, and just kind of like the overall like setup right now is something where I really think that Garlic Coin could become like truly insane. So I own a lot of it, by the way, just saying. So that obviously colors my opinion. I forgot we got Bank of Canada interest rate decision. Okay. Well, we had a pretty good move up since then. So I think, remember I was saying like 2/5. Let's see here. Or no, let's do it like extensions. How do I calculate this? I'm thinking. Give me a second. Meme financial. What even is it? I'm sorry. I don't understand what the. I'm assuming it was in relation to garlic coin, but. Ah. Okay, so it should be. Okay. Okay, so 41, 42. Which is just about right. I see. Yes, I see. 41, 41. So I'm just making the assumption that the move that we have seen up is the result of one large meta order, and that I'm making the assumption that this one large meta order, has been perfectly calculated and is going fine for them, and everything else like that. And if that's the case, then the full extent of the meta order would be something like 41, 42. Huge estimate, but let's see. Um, there's some single prints of sorts up there. So that would make complete sense as to that would be where the extent of their move. So I'm assuming the question was, what even is it? Garlic coin. Garlic coin is just another stupid coin. It's not really any different from Dogecoin, except for that Garlic coin has a limited supply. There's only 69 million coins out, and the majority of them have already been mined out. So supply in Garlic coin is very constrained. Oh, see, that came down through and stopped me out, didn't it? Yes, sir, it did. Ooh, I took 2 on that. Oh, yeah, because, okay. So let's fix that. So I want this one tick thing. No, it says stop limit. That is so dumb. I think that there's still. Hold on. The news squawk is talking a lot about the Bank of Canada. Why did that not work then? Okay. Well, I kind of had the Treasury right in that I said, well, it could come through me. It did. So whatever. Um. So as long as the S&P 500 is above 3,800, I think that you will continue to see some struggle. So there's a number of Wall Street analysts saying that we're potentially overbought, and there's real concern over the pace of the recovery, particularly outside of the United States. But the market is still going to be in this buy the dip, and there's a huge army of retail traders that don't know how to do anything else. So I think you could see some volatile. If we are going to go down to 3,800, I think that you could see some volatile movement. And you got to keep in mind that yesterday was a pretty extreme move, and there was quite a bit of overly bearishness overnight. So I think you're probably seeing a little bit of short covering. Yeah. You know what I mean? The treasuries came back so hard. Well, I think that all coincided with the Bank of Canada release, right? Yeah, it did. I guess I shouldn't have left that order out there. I had completely forgotten about it by that point. I was talking about Garlic Coin, wasn't I? So focus, 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 Seth. Ooh. That's okay. The one, I think that the E-mini matters. This is still very experimental. Let's brainstorm a cryptocurrency. Well, remember, I had brainstormed out a cryptocurrency. I don't remember what the dealio was. Oh yes. I had gamed out a cryptocurrency that rewarded you for using it. Was what I was kind of getting at. So a Vixa coin. So it was basically you go and you create a wallet, and you could donate to a different wallet, and then you would receive a portion of the proceeds that would be made by that other wallet, right? So it would be like Walmart you could start a wallet, and everybody sends money to Walmart to help fund them. And then as more money comes into Walmart, a portion of the money that you give to that address gets redistributed out to the people that have contributed to it, right? So it would essentially reward people for using it. It would kind of be like stocks, except for that it would be a stock where you make money for every bit of money that they make. But I think it was more complicated than that. I don't think that was, I don't know. Maybe I'm just gaming it out in my head at the moment. But the thing that I think they need, a stock market coin would be really cool. Well, I mean, you can do like a just to make a token that turns into a stock, right? I guess. So there's a couple of things. One thing is you kind of want something that's counter-cyclical too, right? I think that DAI is actually not a bad implementation of that, and it's something that I talked about in 2017. There was another one of those like, well, if we ever get back in, that's one of the ones that we should look at. Oh man, let's actually come back and look at that. Because DAI is still pretty high up there, isn't it? Oh, maybe not. 38. Oh, it's been pretty consistent. Oh, what's the other half to it? Oh, it's MKR. DAI is the stable coin. MKR is the other half to it, right? Yeah. Pretty impressive run lately. Was it really? No, that's been around longer than 2017, hasn't it? It didn't start at 281, did it? But look, it's gone 3,000. So if we had gotten in 2019, let's say 500 to 3,500, so 7 times your money, would have been not bad. So that's kind of the one side of it. But what I'm getting at is like, okay, the theory that kind of overtook Bitcoin was as they said, just hold the coin. Like if you just hold the coin, then it will go up in price because there won't be much supply. This is a logic that only works for so long, and you'll see it in other markets when people just try and hold on to the thing. There's a breaking point, and eventually everybody gives in, and then you get a big crash, right? So I think that instead what you want to do is you want to create a cryptocurrency that rewards people for using it. Like, the more you use it and the more quickly you use it, the more you gain. Like it would actually reward you for using it to some extent. To encourage people to use the currency, and that's what would make it popular, right? And then because of everybody using it, basically what you're doing is you're trying to create price increase from demand rather than from supply, right? That would still be deflationary. Isn't that what MasterCard is doing with their Bitcoin plan? I mean, I think that's, maybe I haven't heard anything about it, but maybe that would be the kind of thing that they would do, right? But yeah, it would be kind of like how a credit card gives you rewards for using the card. It'd be exactly like that. It's like a portion of the mined block would go to the people that spent money in that block. So that people would be encouraged to use it, or often. That's the way they would do it. Maybe there's something like that. They're bringing crypto onto their network. I don't know if that's the same thing. So something that you'll see a lot. It's really quite funny, honestly, is these companies that they're jumping on Bitcoin by like allowing you to like buy Bitcoin, but to not actually use it, right? That's what I think is really funny. It's like, yes, you can buy it through MasterCard, but you're still using MasterCard's network to do transactions and stuff. And what I think kind of makes a cryptocurrency interesting, but also scary at the same time, is the openness of it. The ability to come in and I mean, I don't want it to be that everybody can see your finances and everything. I don't think that should be the case, but to be able to look at all transactions on the whole, for everybody to be able to do that, wow! Can you imagine? Can you imagine what a different world we would be in the world of finance if we could literally look at and inspect every financial transaction that happens in the country, right? All of the sudden, things like GDP and CPI and everything else is completely different at that point. You want to know what housing is? How the price of housing is increasing? We can look at every housing transaction. And there should, you would want to have a way of marking them somehow, whether it was the institution that did it or what it was that they bought. Maybe there should be a code to every transaction to specify what the good was for. So that you would be able to look at the blockchain, for instance. Like, what if you could look at the blockchain and track the price of bread over time? Give every product its own unique hash code, kind of like IP addresses. It'd be like an IP address. It would have to be a big thing. Oh man, what I'm talking about would have to be big. But no, that would be amazing. And think of how useful that would be to like central banks and stuff. And then if you're a central bank, you need to pump more money into the system. You can create it and distribute it immediately instead of having to go through all of these intermediaries like we do now. Like, there's real utility to it, right? It's just the whole idea of having the currency with completely decentralized, nobody able to manage the economy. It seems to me, or at least I think that history has shown out that the economy is incapable of moderating itself. That there needs to be an outside, there needs to be an intelligent outside factor to moderate the market to a certain extent. Otherwise, it will just devour itself. A little lighter on the stream today than it was yesterday. Am I that boring? Or maybe YouTube doesn't like me. I don't know. Yeah, I don't know. I don't know what the deal is. I guess I shouldn't worry about it. Looney dumps and pumps on headline chaos as Bank of Canada tapers bond purchases and moves up rate guidance. Maybe they're closing it because I'm talking about all that stuff and not the Bank of Canada interest rate decision, because it seems like significant, huh? I'm noticing, relatively speaking, that the 10-year is lagging a little bit. So, fill me, please, sir. USD CAD falls after Bank of Canada decision. Dollar is at 91.18. Is there anything new in Baby Asher world? Well, I think you were here earlier when I said he likes to climb on chairs now. He can climb onto the table, and he thinks that the table is where he wants to be. He spent a lot of time outside yesterday. Gonna cancel that. There's no chance of that. Recenter. A climber. Yeah, well, the other kids were climbers too, apparently. So I've taught him how to put blocks away back into the box that they came in. So that's good. Record-shattering cold hits central U.S. Oh man, I'm concerned about crops this year. In the Southwest, we've got such a strong drought that some farmers are just not even planting. And in the Midwest and the East, they're getting cold that's like really disrupting things. Well, so I said 41.42. They've gone a little bit through that. At the moment, the E-mini is kind of starting to do stuff that suggests that like it's just never going to stop. And I did get out too early, didn't I? I could have held on. I mean, like I did see a spot that actually did mean something. So that's cool, but you know, I would have only had to take up like a point of heat off of it. So I don't know if in that particular instance that I really should have taken it off. I mean, I was kind of sitting there thinking like, this is a really impressive bull run. It's cold here, unexpected, but not that unusual. We stay cold at night now, and I am concerned about food insecurity and the effect it has on consumers. I have been worried for a while now. Yeah, well, I mean, we haven't had to deal with that in the modern world, have we?
Kevin Wimmer says, will quote myself from earlier low, or they are ready to kill the shorts. I mean, the bulls have been relentless since well last year.
Yeah. Well, I guess the question that I'm wondering at the moment is how much of this is short covering and how much of this is like new capital being put to work. I kind of have to wonder. So when I come in, the big thing that I was thinking about today was it's Wednesday. It's a Wednesday and we've had 2 down days. So like the chances of having a third really big down day, I think, are unlikely, especially since a lot of capital tends to get deployed on Wednesdays. And it seems like when they deploy capital on a Wednesday, it's they're buying, So, that's where it was like. But I don't think that any of this changes like the larger fundamental reading. Like there wasn't a piece of news that came out that makes me rethink the whole situation. In fact, what I'm seeing here from the Canadian monetary policy, it sounds like they're scaling back their bond purchases. So that's not necessarily good for the markets, right? But so I don't see the larger picture really changing. So that's why I still feel like that there's really big risk of going down to 3,800. But I guess there's this other thing, which is like there's a certain point at which, like if we were to get above yesterday's high, 41.50 and 3/4, that would be, well, let's look at the VIX and everything. There's a certain point at which it almost cancels out. Well, so they're at target 1. I don't know about that. 43, 69. I don't know. When I come into cumulative delta, the degree of cumulative delta is pretty impressive too. It kind of looks like liquidity coming in. I get the gasoline inventories. So let's say that there is a strong reason to believe that from a fundamental valuation perspective that we are too high, but that there is still a lot of liquidity looking for somewhere to go. Yeah? And I don't know when that subsides. I'm gonna come in here and see if was there anything else about Garlic Coin. Soulja Boy shout out for Garlic Coin was a thing. I won't play it, but Soulja Boy did do a shout out for Garlic Coin. He made a little video. Now we just need Alon on board. Oh gosh. If Alon was to tweet about Garlic Coin, man. Can you imagine if Alon came in and tweeted about Garlic Coin and then all of a sudden tomorrow it was worth $1,000? Or Elon tweets Garlic Coin is the worst. Sell it. Buy Dodge, and Garlic Coin hits new low. No, I don't know if it would be the same thing if he tweeted something bearish about it, to be honest with you.
Winston's mom says, liquidity is oxygen for a financial system. Boris told me that Ruth Porat said that.
So the thing is if Elon Musk tweeted about Garlic Coin at all, it would increase the awareness of the coin so much that and the thing is in Garlic Coin is that there's not really a lot of downside available. You know what I mean? Like some of this was just that it was as low as it could go. like when it came back to a cent, that was like there was no doubt in my mind that was going to happen at some point. The just from the dynamics of the supply and demand and how their mining works and everything, I think that one was inevitable, that they would run out of supply and it would come back up to 1 cent, right? But now that we're at 8 cents, so it's like, could we lose 8 cents? Yeah. But like, you kind of have to think, if Elon said something so bearish, would just the awareness of the coin in general make it more valuable just because of that? You know what I mean? I think that the value of just more people hearing about it is more than the 8 cents that you would lose if Elon was negative. I don't know. The one as I'm saying that, I'm just kind of thinking about the Bitcoin maximalists that think that everything that happens is good for Bitcoin, right?
Kevin Wimmer says plottist, Garlic Coin can hit the negatives like oil last year with $37.
No. If only. If people would pay you to take on their Garlic Coins, I would do that, man. Heck yeah. I'll buy the Garlic Coins and you give me, I'll buy $1,000 in Garlic Coins and you give me $1,000. Let's do it. Let's do it. You want to get rid of them that badly. I wouldn't mind having another, 3,000 Garlic Coins. Eurozone still set for divergence despite financial support. The chances of a swift recovery remain in favor of the old core. Eurozone country as well. The periphery remains at risk of a prolonged slump.
Kevin Wimmer says sounds like the worst trade deal in the history of trade deals. I am in.
Well, you were the one that proposed it. Oh, I am in. Wait, I'm going to read that again.
Kevin Wimmer says sounds like the worst trade deal in the history of trade deals. I am in.
Oh, he read it out. I am. Like the letter M. Wait, let's try that.
Speculator says day trading says I am.
Oh, that is weird. Oh, we'll have this in writing tomorrow. This is great.
Speculator says day trading says I am.
It is exactly this. This is so funny. How much do you think that? Well, okay. Oh, sorry. I had it back a little bit. So they are topping off around where I said though. So I don't know. It's interesting. It was like just like that very specific situation where I was like, I'm pretty sure that we can consider this a meta order and judge where it's going to go to. I wonder, though, if we were to say that that was 3/5. Where did I? Oh, yeah, I have it right here. So if I modify this again, my retracements to the levels, I have 8 price levels. What? We're gonna remove all this stuff. And this one is gonna be 33.33. And this one is gonna be 66.66. And this one is gonna be 166.66. Okay. Okay. Wait, why is it not showing them now? Oh, maybe because some of those retracements were just not visible, huh? Yeah. Visible. I'll add another one that will be 50%. Okay. There we go. Ah. Show you the chart. So what I'm assuming is that we're gonna get like this 3/5 issue. So this is gonna be 3/5 of the move, and this is gonna be 2/5 of the move, right? So you can see how when we come up to where we first initially started to see the meta order slow down. So let's put it there for, okay, so look, that's they balance back out right around where it predicts that it should be. But I'm looking over here on this and I'm thinking, well, let's do it from that bar right there. That 1/3 of it ends up being this choppy area. So then this would be, if you say this is the choppy area, then you say this is double that. And then this is another double that. But you can't really say where that spot is right there, but there probably was some absorption there, right? I don't know. That one requires a little bit more testing, though. We need to go back and read back about how they get that number. I'm not just pulling that 3/5 out of nowhere. There's it shows up in some formulas, but I don't know if I can really use it the way that I'm showing you guys right there. Dum-ba-dum-ba-dum. Well, I got about 10 minutes left here. I don't think I'm going to make another trade. Oh, did I try? Yeah, I did. Oh, oh my gosh. I'll put these trades out in the 10-year and then completely forget about them. But it did work. It looks like it did tick against me, but it didn't tick through, and he made the profit. So I should have been paying attention better. Because who knows if that one would have been a scratch, you know? I think I had the call right. At the moment, I think if I was going to try and arbitrage one out, I would try and get between 01 and 02 on the ZB. Please take a quick second to hit the like button if you haven't. Yeah, thank you very much. You know, I have like a big piece of paper on here about all of the things that I'm supposed to tell you guys about, right? So if you're new here, make sure that you like the video and subscribe and hit that bell icon, because we stream every day. And if you want YouTube to ensure that YouTube is going to tell you when we're live and when there are new videos up, clicking the bell icon is the only way to make sure that you don't miss a thing. We also have a Discord that is very popular. It's basically the largest future-specific Discord out there, for free at least. And there are a lot of good traders in there. You know, some people talking about some of the traders in Discord that they're really impressed with. Then also, if you want to see some of the indicators that I'm using, for instance, the synthetic dollar index, or you know, the little clicky sounds that you see that allow me to see the large orders and where they're going to and everything else like that, you can go to speculatorsset.com. It's free for the first 2 weeks, and then after that you have to use the channel subscription. So you click the join button here on YouTube and you can sign up for the $10 subscription. If you just sign up for the $1 subscription, that's just like a nice way to show your support. I would make it free if I could, just, you know, for people to say, I like this channel and I want to show that this is a cool channel. But it gives you like access to special smileys and stuff like that. So click that join button if you haven't done that. Buy the $1 a month subscription. I also have a Patreon where I post Bitcoin charts. I kind of need to consolidate some of that stuff. I don't feel like that the Patreon is all that awesome, but I don't know. I'll start posting that. Maybe I think that they've changed things in YouTube, so I can start posting that on YouTube too. But and then, as Winston has already pointed out, there is in the video description there is a YADA code. So YADA is a savings account that basically the way that they pay your interest out is by doing a lottery every week. So you'll actually make more money than you would with a traditional savings account. I have made more money than I would have with a traditional savings account. And like they really reward you to refer your family and friends. So, well, the ZB just took a dive there. It's a little bit of steepening coming in here, huh? Anyways, I truly enjoy the YADA thing. So if you haven't done that, check it out. Use the code SpeculatorSeth, and we both get like 100 tickets, which can be like $10. So, and then lastly, I do have social media. So I'm on TikTok, I'm on Twitter, I'm on Facebook. Don't really post much on Facebook, but what you gonna do? Oh yeah, the Trader's Gonna Trade mug. I forgot about that. You can get this mug. Where is the mug? I think the baby pulled it and it's on the ground somewhere. There's a mug that says Trader's Gonna Trade. It's amazing. Now we need to write that. Let's just write that down. See, I think I need to. The one of the issues that I have here, these are all things that's like, I want to provide for you guys. So I really hate having it everywhere. Like I wish that it was all just self-contained within YouTube. But I don't know. So if I consolidate, I could maybe move the Patreon out. So, anyways, I'm just gonna watch here for a little bit. How much further the treasury is gonna go here? You think? This is coming down. The Bank of Canada not deciding to reduce their purchases. That is gonna hurt the interest rates. It's a curious surprise I wasn't expecting. I'm actually kind of looking at it now and being like, well, the market isn't as dramatic as maybe they should be, right? Look at that go, man. Like that is just going. And E-mini is still looking pretty bullish. Well, I'm wondering if today is it really will end up being like a straight up trend day. It's probably going to pull back significantly. I wouldn't be surprised if they come back to, let's say, 41.32 a little bit later. Like short-term post meta order regime change. Possible. But there was an impressive bull run. I don't know what it is that makes me think maybe this could be a trend day. Why am I not saying, well, this buy is a little bit overdone now? Probably just because retail traders getting overly excited. I don't know. We'll stick around for a few more minutes. And we'll turn on the computer here. Then we should do that. So, while I'm thinking about it, what else is kind of funny or weird is that the views have been less on the stream. I maybe because I haven't been making one-off videos. I don't know. But the stream has been a little bit more sparse. It could also be that because I had a popular period and then most of those people aren't going to stick around, that it kind of hurts the channel for a little bit. So it may be taking a while for that to even back out. You know what I mean? But I'm kind of wondering, like, or not wondering, but the thing that I think is funny is that I've been doing so well lately. I haven't had, like, it hasn't just been like I've been winning every day. It's like I'll take maybe 2 trades and work it out. I'll look at that. That one in the 10-year worked perfect. Quick and easy fill. So, I don't know. It's kind of funny. But then, I don't know, you can kind of tell that I feel a little bit uneasy about it. Because it's like, well, I'm doing so well, but I'm putting into practice some principles and stuff like that. But at the same time, I don't really feel like I'm doing, I still just kind of like, okay, this is what I should be doing. And then I do it. And I don't know. It's kind of weird. It's kind of weird to think about. Does it just become an unconscious thing? Or am I just getting lucky? Well, the market's been up. I didn't do amazing yesterday. Yesterday, depending on how much risk I was willing to put on, could be considered a losing day. But with the streak that I've been on, I was willing to do it. So. Channel numbers do go up and down. You had such a big audience during the Well, not the Dogecoin, the GameStop drama, right? And it's springtime, so people are seeing it, spring cleaning, and everyone seems to be on pause. Well, yeah, that's another thing is there has been significantly less interest in the stock market as a whole. Yeah, that's true. And I need to investigate why these two stop outs that I had, that they were minus 31 and not 15. Because that's not right. They should both have just been -1 or break even. Because they were stop limits. So it should put a limit order in to get out. And I don't know. Yeah, GameStop. Thing was, I would kind of put them out there and then forget about them. At the same time, probably I should be paying closer attention, right? There was really getting enough volume at that time to be justify taking those trades. I don't know. Okay, it is time for me to go. So, catch you guys tomorrow. Stay profitable, friends.